Anders, I've spent a bit of time looking at your report, and I think your outlook is very nuanced. Risks of increasing unemployment levels could potentially impact demand negatively, but activity expected to recover. There will likely be change in demand and behaviours in the office market as well. So just wrap it all together, the two. What do you think the outlook looks like today?
I think we're getting to see some improvement in the market, definitely. If we go to construction, we can see we look improved outlook when it comes to residential construction. We have seen a very strong market in different geographies during the first quarter. So we expect that to continue. And also on the non-residential market, we can see improvement. So we have increased our outlook there, as well as the residential development in Europe.
In terms of this line that you said here, though, you think, and I'm on page 3 of your report here, says we have an attractive offering. Leasing activity continues to be negatively impacted by tenant uncertainty due to the pandemic. That really stood out for me as well. But I mean, are we going to see office space just transformed, or we need less office space? What's your outlook there? I mean, Jeff asked the question to a technology chap just in the last interview as well. Of course, it's the same question to you, but from a different perspective.
Yes, definitely. The leasing activities has been slow during the pandemic, and we still have good dialogues with potential tenants in our facilities, but they are hesitant. They don't take decision, and I expect that to continue until we're out from the pandemic. On the other hand, we can see that more and more companies now around our markets, they are preparing themselves to get people back to the office, and people also want to get back to the office because you miss out for so much. You miss out to developing the company, innovation, socializing. You can keep the machine up and running for some time, but people need to get back to the office.
Anders, I want to just dig a little bit further into some of the comments you made earlier about the residential side. You've pointed to the very strong level already, but profitability is improving from that level. You're trying to bring new projects into the mix. It's those new projects that fascinates me because we've seen elements of price pressures in the supply chain. Lumber prices, for instance, have gone up, copper's gone up, a whole range of other inputs have increased recently to multi-year highs. What's that likely to do to profitability as you bring new projects on board?
And we have seen that as well, of course, that the prices on steel, timber, and so on has increased, and we're mitigating that. In the ongoing project, we sort of secure the prices for those materials as early as possible, of course. And when we plan for new projects, when we bid for new projects and start development projects, we secure as much as possible before we even bid. That's our way to mitigate the price increases. And we also could see in the first quarter that we actually increased our development activities in residential. We start more homes, we sold more homes. So I expect that to continue in a stable market.
Anders, I'm curious a little bit about the demand story. We've heard that construction has been so resilient during this crisis. We will walk past construction sites and you can see things are happening as per normal. But as vaccines are rolled out, what is that doing to the demand side, and how is that changing the order book as we see different trends start to emerge?
I can see increasing optimism in the market. Definitely in the US, they're ahead with the vaccination, also in the UK. Compared to the rest of Europe. So I can see increased optimism, and people are getting back, they're starting to consume. So, and that's good for us because we are very heavily dependent on GDP growth, and also that the tax revenue for the publics is coming in so they can invest in infrastructure and also social infrastructure.